Have you ever wondered where to start with investing? It may seem overwhelming, but don't worry. We've got you covered. The world of investing is vast and varied, but it's also a vital part of securing a financially stable future. Investing can help you generate income, save for retirement, and even reach financial goals. It's about more than just making money. It's about making your money work for you. This video is your guide to the basics of investing. No matter your financial background or knowledge level, we're here to help you navigate the waters. We'll go over the importance of setting clear financial goals, understanding different investment options, and choosing the right investment strategy. Investing doesn't have to be intimidating. With the right guidance, you can make informed decisions that lead to financial growth and freedom. So, are you ready to take the first step towards financial freedom? Let's dive into the world of investing. First things first, what exactly is investing? Picture this. You have an extra apple today. Instead of simply saving it for tomorrow, you planted seeds. Over time, those seeds sprout, grow, and bear more apples than you initially had. That's the essence of investing. It's the practice of setting aside and committing your resources today, with the expectation that they will grow and yield more in the future. Investing is different from saving. When you save, you're putting money aside for future use. It's a safety net, a cushion for unexpected expenses. The money stays the same, just moved to a secure place. But when you invest, you're putting your money to work. You're buying assets such as stocks, bonds, real estate, or starting a business, with the hope that these assets will generate more money over time. Now let's talk about risk and reward. Every investment comes with a certain level of risk. It's the possibility that you may lose some or all of your investment. However, it's important to remember that with risk comes potential reward. The potential for increased returns is what makes investing attractive. It's like planting a seed and waiting for it to grow. There's a risk that it might not sprout, but if it does, the reward can be substantial. And here's another key point. Not all investments are created equal. Some are riskier than others. This is where the concept of risk tolerance comes into play. It's about how much risk you are comfortable taking on. Some people might be comfortable planting an apple tree, while others might prefer a less risky but slower growing option like a fern. Investing is about more than just making money. It's about financial independence, growing wealth, and creating a secure future. It's about making your money work for you, rather than you working for your money. With a better understanding of what investing is, we can now move on to the steps on how to start investing. Before you invest a single dime, you need to have clear financial goals. It's like setting out on a journey. You wouldn't start without knowing your destination, would you? The same applies to investing. Your goals act as your guiding stars, helping you navigate the financial seas. Now, financial goals can be short-term or long-term. Short-term goals might include saving for a vacation or building an emergency fund. These goals typically require safer investments as you'll need the money sooner rather than later. On the other hand, long-term goals like retirement or funding your child's education give you more time. This allows you to invest in assets that may carry higher risk, but also offer higher returns over time. The importance of aligning your investments with your financial goals cannot be overstated. It ensures that you're not just investing for the sake of it, but that every dollar you put in is working towards achieving your personal financial milestones. Setting clear financial goals is the first step towards successful investing. Now that you have your financial goals set, it's time to understand the different investment options available to you. Let's start with stocks. When you buy a stock, you're buying a small piece of a company. As the company thrives, so does your investment. Stocks can be risky, but they also offer the potential for high returns, making them a good choice for long-term financial goals. Next up, we have bonds. Bonds are essentially loans you give to a company or the government. In return, they promise to pay you back with interest. Bonds are generally a safer option than stocks, but their returns are also typically lower. They work best for medium-term goals or as a way to balance out riskier investments. Now let's talk about mutual funds. These are a collection of stocks, bonds, and other assets managed by a professional. They offer diversification, meaning your risk is spread across many different investments. Mutual funds can align with a variety of financial goals depending on the specific mix of assets within the fund. Real estate is another popular investment choice. This could mean buying property to rent out or investing in a real estate investment trust. Real estate can provide a steady income stream and potential appreciation over time. It's a tangible asset that can align well with long-term wealth-building goals. There are also options like commodities like gold or oil, and even more modern choices like cryptocurrency. Each of these has its own set of risks and rewards, and understanding them can help you make informed decisions. Remember, it's not about choosing the best investment. It's about choosing the right investment for your financial goals. Do you want to save for retirement, a down payment on a house, your child's education, or something else? Different investments align with different goals. In the end, it's all about balance. A good investment portfolio usually includes a mix of different types of investments. This way, if one sector takes a hit, your entire portfolio isn't wiped out. Understanding the different investment options allows you to choose the one that best aligns with your financial goals. Knowing your financial goals and understanding your investment options, let's move on to choosing the right investment strategy. This is where the rubber meets the road. Your investment strategy is your game plan. It's the blueprint that guides your decisions and helps you navigate the financial markets. A key aspect of a solid investment strategy is aligning it with your risk tolerance. High-risk investments can potentially yield high returns, but they can also lead to significant losses. On the other hand, low-risk investments are safer, but they usually offer lower returns. Another crucial part of an effective investment strategy is diversification. This involves spreading your investments across a variety of asset classes to reduce risk. Think of it as not putting all your eggs in one basket. If one investment goes south, others might do well, balancing out potential losses. Remember, no two investors are the same. What works for one might not work for another. Tailor your investment strategy to your unique financial goals and risk tolerance. Choosing the right investment strategy is key to managing risk and achieving your financial goals. With your financial goals set, your investment options understood, and your strategy chosen, you're now ready to start investing. So let's dive into the nitty-gritty of it all. The first thing you need to do is open an investment account. This is a relatively straightforward process and can be done with a bank, a brokerage firm, or an online platform. Each of these options has its own set of pros and cons, so you'll want to do your research and choose the one that best suits your needs. Once you've got your account up and running, it's time to buy your first investment. This step is where your earlier groundwork comes into play. You've already determined your financial goals and the investment strategy that will help you reach them. Now you just have to put that plan into action. The key here is to start small. Don't rush into making large investments right off the bat. Instead, start with what you're comfortable with and gradually increase your investments as you become more confident and your financial situation improves. Next, you'll want to make investing a regular habit. This could mean setting up automatic contributions to your investment account or manually investing a set amount each month. Regular investing not only helps grow your wealth over time, but also takes advantage of a principle known as dollar cost averaging. This principle essentially means that by investing a fixed amount regularly, you buy more shares when prices are low and fewer shares when prices are high, which can lead to potentially lower average costs over time. Lastly, remember that investing is a long-term game. It requires patience and discipline. The stock market will have its ups and downs, but over the long haul, it has historically trended upwards. So, don't panic when things get a bit rocky. Stick to your plan, stay patient, and keep your eyes on the prize. And that's it! You're now on your way to becoming a successful investor. So, that's a wrap on our Investing 101 guide. We've journeyed together through the basics of investing, starting with understanding what investing really is to setting clear financial goals. We've explored the diverse spectrum of investment options, and we've discussed how to choose the right investment strategy that aligns with your financial objectives. But remember, this is just the beginning. The world of investing is dynamic and constantly evolving. It's crucial to continue learning, to stay informed about market trends, and to adapt your strategy as needed. The road to financial freedom may be long and winding, but each step you take is a step towards securing your financial future. Don't be afraid to ask questions, to seek advice, and to take calculated risks. After all, every great investor started somewhere. And now, you've taken your first step. Remember, the journey to financial freedom begins with the first step. Happy investing!